Hello traders at CMC Markets. Welcome to a new update by RRG Research for Monday the 19th of February, and I am recording this on Friday the 16th before the market opens. Let's try and see if we can untangle what the market is throwing at us at the moment. Starting with the RRG for various stock market indices around the world, you can see it's a little bit clustered, but there's two that are really standing out, and that's the New York FANG index shooting off into the leading quadrant, and then one other one is the Hang Seng, which is starting to come to life deep inside the lagging quadrant. Now, you may remember that this is a market that has been underwater for quite some time, so I'd like to take a look at that. If I start zooming in on this cluster of tails, then we can see that there is definitely, obviously, Nasdaq, S&P doing well, but also the Nikkei index, which is interesting as it's starting to come to life together with the Hang Seng index, both on the eastern side of the world. And then another cluster that I'm looking at is the CAC, the European index, and the DAX. So the European cluster of markets seem to be rotating out of favor. So from this RRG alone, probably the best takeaway is that the US is the established relative uptrend. So that's the Nasdaq, S&P, not so much the Dow Jones index, definitely the New York FANG. And then we've got Europe, CAC, Eurostoxx, DAX rotating out of favor. And then there's a very early stages of uptick in the Hang Seng index, and to a lesser extent the Nikkei index, which is also already inside the leading quadrant, so doing quite well for the last few weeks. And if we bring that to the daily RRG, then you can see that the New York FANG is obviously seriously confirmed here, pushing off into the leading quadrant, so that's really nice. You also see that the S&P and the Nasdaq are doing well, so they're confirming their trends here, as is the Nikkei index, which is actually rotating back up while inside the weakening quadrant. And we know that that is a very good rotation because it means that it is starting a new up lag in an already established relative uptrend on the daily scale. So that's a good thing. And here we see the Hang Seng index actually picking up rather nicely inside the improving quadrant if we play that around. So this is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. This is only 2 weeks ago. 1, 2, 3, 4, 5. So this is 3 weeks ago, and you saw it starting to pick up. And now the weekly is starting to pick up as well. So that's a nice confluence of direction of those tails for the Hang Seng index. And if we go to the lagging quadrant, you see again, so the DAX, one little uptick here, Eurostoxx still going down, CAC little uptick to the right, but the general direction of these tails is actually pushing into the lagging quadrant in line with what you see here. So again, also on the daily RRG, established trends in the US, probably the best area in the world right now to be in. Questionable on how long that's going to last. We're going to take a look at some of these charts in a minute, but they are overstretched. But as you know, these blow-offs, these trends can go on much longer than you may anticipate. We see that Europe is rolling over, not really the best area, and then there is slimmers of hope, green shoots in the Nikkei and in the Hang Seng index. If I take this to a price-based level, then you see that all these indices are on the right-hand side of the RRG, and that means that all of them are in price uptrends, but they're also losing a bit of momentum. Not desperately yet, not massively, but they are pointing downwards. So momentum level, RS momentum level, for a lot of them around the zero, which means that there is no acceleration anymore in those trends. So they are in uptrends, but they are not accelerating anymore. And that makes them vulnerable for topping patterns, for peaks to be formed. We'll have to look at the individual charts to figure out whether that's going on. And you can see how far away the New York FANG is from the rest of the pack. it means that they're in strong trends, but it also means that they are quite vulnerable because they have traveled such a long way. If we start looking at a few of these individual charts, then here is Europe, the Europe 600 index, Stocks Europe 600 index. Obviously pushing against resistance, might even be breaking it from a price perspective, but if you look at the relative strength, then it's definitely one of these underperformers, as you saw on the relative rotation graph. Also, when I bring in something like the RSI, you can see how that is starting to show a negative divergence. That's usually not a super good sign. And also here on the MACD, you will find a similar situation where the level is not confirming the level of the last high. So you also have some sort of a negative divergence building up there. And it's actually quite the same when you look at the DAX, similar, it's slightly edging higher, but not really breaking through. Here also the MACD not able to confirm that last high by a mile, actually. That's quite a big distance. Similar for the RSI, you can see how that is diverging. I'm not a big fan of labeling this divergence here with that high because the in-between low is almost 30. So for me, that means that it is recycling. But this area from here on is definitely something that I'm looking at because you can see how in the price is sort of edging higher against resistance, and the RSI is not being able to keep up with that, building up that negative divergence. So that's definitely some sort of a pushback for the DAX index. And here you can see how the relative strength is actually rolling over below the 100 level. That means that we're creating that rotation on the left-hand side of the RRG where it pushes into improving, and then before it reaches leading, it rolls over back into lagging. That's a situation that we have here on that daily relative strength scale. Despite that nice little gap up, but it's still not being pushed higher. On the CAC is actually even worse because the CAC actually jumped above resistance. So in theory, that is a very good sign, but it's nowhere near being confirmed. The relative strength is as weak as we saw it in the Euro 600 and in the DAX. But also look at the CAC. We're not confirming that last. In the MACD, we're not confirming that last high, and also in the RSI. We're building up that negative divergence here in this cluster from the gap up, and now this another gap up here, but it's not confirmed. So very thinly supported gaps back up, very thinly supported uptrends. We need to wait and see how that pans out, but I'd be very careful buying it up here with this kind of negative divergences building up. Now, if we move to the other side of the ocean, looking at the S&P, this is a very nice uptrend. If you compare this chart to the ones that we saw in Europe, this is still in its rhythm of higher highs and higher lows. There's all kinds of debates and arguments that can be brought in that this is an overstretched market and that we're overbought and that we're climbing a wall of worry, and all of that is okay, but if you just look at the chart, you will see that it is still a rhythm of higher highs and higher lows. Yes, it's overstretched, but there are no signs in the price chart of things rolling over. Now, talking about divergence, that's building up here. So there is reason for caution. But unlike the ones that we saw in Europe, this is not running into resistance as a chart. If you would look at this chart just from a price perspective, especially if you take the weekly one, and let me just do this. And if you would take away the price and the time, and I wouldn't tell you that it's the S&P 500, I think most people would argue that this is just a very strong chart. We're breaking to new highs. It's usually a very good thing in a bull market. So despite the fact that there may be lots of reasons to be cautious with the US market, you should. There's no reason, there's no clear sell signal from a technical perspective, in my opinion. Look at the MACD, not really confirming it, but not as low as we saw it on the European side, but look at the relative strength here. That is actually very good. You see that RS ratio is a very high level. It's starting to bottom out way above 100, suggesting that there is another up lag in the already established relative uptrend underway. And that also goes for the Nasdaq index. Quite a similar, you see some sort of a divergence building up in the MACD. We'll see that in the RSI as well. But again, it's still a rhythm of higher highs and higher lows, and that's what we're looking for. The relative strength lines here also starting to bottom out above 100. As soon as you will see the S&P and the Nasdaq and possibly the New York FANG, here's the New York FANG, same picture, higher highs, higher lows. Look at this relative strength, super strong. So these relative strength charts are actually telling us that the US is the strongest area in the world. The price charts are telling us that it is overstretched, but again, you never know how long these outperformance, these periods of outperformance, these stretches will last. There's actually a very nice saying that tells me that says markets are connected to fundamentals, but only by a mile-long rubber band. And what that means is that you can see these overshoots and undershoots going quite long, going against what you would, I don't know, arguably say like overbought, too expensive. You come up with all the arguments. But just looking at the price chart, this is a very neat rhythm of higher highs and higher lows. So the US still in very good shape. As soon as you see real sell signals, and with that I mean like double tops, toppish formations, trend breaks, that kind of stuff, a start of a new series of lower highs and lower lows, that would really be a sign for me to become very, very more cautious with the S&P or with the US markets and look the other way. That time has not come yet when I'm talking about this. Now to the other side, here's the Nikkei index. This is a market that is breaking to new highs, and if you look at the relative strength, that is still nice up in the air and above 100, starting to turn around, and that makes it interesting. If you look at the MACD, there is no divergence. It's actually confirming those higher highs and higher lows, and you will see a similar picture in the RSI, which is also starting to, well, this might become some sort of a divergence, but it's not there yet. So this is actually a really good sign, and we are actually reaching all-time high levels in the Nikkei index, which is going to be very, very challenging. And oh boy, when the Japanese market pushes to new all-time highs, I think that's going to be a very interesting situation. Maybe we need to run into some sort of a pause at that level, but I don't think this is a market you want to go against. It's one of the better markets, starting to push and with still some upside potential left. And the last one, which really has upside potential left, I think, is the Hang Seng Index. Look at this. This market has been going against the trend of world stock market indices for pretty much the entire year so far. Well, the entire last year, so 2023, all the way down. And we're not there yet. We're still in that downtrend. And it is possible that we're in one of these like consolidation sideways patterns within the falling trend. But we'll, if that is the case, we'll find out soon, because then the market will drop below its previous low or put in a new high here, and we'll see some sort of a renewed impulse to the downside. But if you look at the relative strength, you can see that it's starting to push up. And we saw in the RRG how these tails have started to pick up, the weekly inside the lagging quadrant starting to point up. And on the daily, it's also already inside the improving quadrant starting to move up. So from a risk-reward point of view, I think this could actually be one of the more interesting markets, because you're definitely not buying into strength, waiting for more strength. You're trying to pick this up at a very low level when strength is emerging. And look at, we are very close to a support area that was set somewhere at the end of 2022 actually. So the Hang Seng, and to a lesser degree the Nikkei index, possibly starting to reverse and move to the upside. And from stock markets, let's go to some individual stocks inside the New York FANG index. If we look at the RRG, so my problem here with these FANG stocks is that most of them are so overstretched that it's, I don't know, it's almost irresponsible to start buying them here. Obviously, you never know where it's going to end, but the higher the price, the bigger the risk. And from a relative perspective, if I look at the RRGs here, it brings up Meta and Nvidia and potentially AMD as being relatively strong stocks, and they are. But the problem is they are already at super high levels, and they've already traveled a hell of a lot of distance in both price and relative strength. You will see the same confirmations on the daily. You will see Meta here, Nvidia there. Snowflake's picking up on the daily, not so much on the weekly, but on the daily it looks quite nice. And there's an interesting move in Tesla on the daily. On the weekly it's still pointing lower, but on the daily we see some sort of an improvement. Where I do see confirmation on the RRG and possibly also on the price charts is for some stocks in a negative fashion. And what I'm looking at, and they're not the least important one. So if you look at Apple, that's moving, that's a really bad tail. If you look at Microsoft, that's a really bad tail. And to a lesser degree also Amazon. But if we look at the price charts of Apple and Microsoft, we're going to do that in a minute, they're not looking too good. And I think that's a risk. And actually Tesla being way down into the lagging quadrant, but this one here also has a potentially interesting price chart to look at. So if we start looking at Apple, you can see that it is under wraps already since July last year. Didn't make new highs, didn't manage to join the FANG bonanza to the upside. And we're actually just holding up above, let's say, 180. If Apple breaks 180 to the downside, I think that's, first of all, a negative sign for Apple, but it'll also be a pretty negative sign for the FANG index and potentially for stock market as a whole, because obviously Apple is one of the bigger stocks there. Look at this relative strength really pushing to new lows, indicating relative weakness for Apple inside the New York FANG, but also against the S&P and other indexes. So the other one that I want to show you was Microsoft. So here's Microsoft, still quite okay on the upside, but look on the relative strength, that is, rolling over. And if you look at the MACD, you got that divergence that we saw in a few of those stock market indices as well. So here, I think there is a bit of risk creeping into Microsoft. Potentially also Amazon, same kind of story. We gapped up. We're still kind of holding up here, but we're in this resistance area of that early 2022 high. Questionable, how strong will that market be? Can we really push higher if we don't get any follow through? And this here is a risk. If you see Amazon, let's take this low here. That's 165.75. If that's taken out to the downside, we're very likely going to see a filling of the gap here. That's down to 160, 161 area. With that relative strength rolling over, be careful with that. Now, the funny thing is, or interesting thing is, that Tesla has been the dog of this whole thing. And we got that shoot up yesterday. And if I just zoom in on this area, I could see here a small head and shoulders reversal. It's only very small, and obviously this longer term trend is, not very good. But you're back above this previous support, which was broken, then acted as resistance, and we're now getting back above it. It looks like a small reversal is happening here. There's resistance already showing up around 207. But if you're, it's a small aggressive idea, but it could be worth looking at, especially with the other FANG stocks at such high levels and almost rolling over. And then a quick look at the RRG for currencies, for Forex, just to top it off. And we can do that really quickly because this is the daily RRG for the G10 currencies. And what you see here, all of them to the left-hand side, all of them at a negative heading. The US dollar is the center of the chart, and what this means is that all these currencies are weakening against the US dollar. This means US dollar strength across the board. And we will see that when we bring up the chart of the euro dollar. You can see how it's continuing lower in this new established downtrend. After breaking this one, you see a nice series of lower highs and lower lows, which is still in place. And we're now resting at support in this is, let's say, around 107. As long as this rhythm continues, we might be on the way to the 105 area in euro dollar. So a little bit more dollar strength ahead of us. And that wraps up this update by RRG Research. Thank you for watching, and I hope you enjoyed the show. I'm looking forward to seeing you again next week at a new update by RRG Research. Same time, same place.